We've been talking about smartphones. We've been talking about demand for technology. And I want to talk about Apple for just a moment because the march to $3 trillion in market cap, it's getting ever closer there. The tech giant reached its $1 trillion valuation back on August 2nd of 2018. Just 2 years later, the valuation hit $2 trillion, and investors are now eagerly awaiting to see if it reaches its next milestone here. So it's at 189.35 in pre-market trading. It would have to be at 190.74 in order to reach $3 trillion. Exactly 190.74. Angelo, yep. CFR Research Senior Equity Analyst, still with us. So Angelo, do you think it's going to get there? How quickly do you think it's going to get there? And, should people be buying into Apple shares right now?
Yeah, I mean, listen, it'll get there. It got close to there, actually, what was it, back in late 2021. And then we actually saw the pullback from nearly 3 trillion all the way back to 2 trillion. And we're kind of now retesting kind of near that 3 trillion level. So I think it's kind of digested a lot of the gains here over the last 2 years in terms of kind of seeing some of that multiple compressed from what we saw kind of during those pandemic kind of, driven years. But that said, we think that, yeah, I mean, this is a name that should eclipse 3 trillion and get well above it, clearly over time. And it's all going to be driven clearly by our free cash flow assumptions of this company. This is a company where we think can generate 1.3 to 1.5 trillion in free cash flow here over the next decade. And all that is going to be utilized towards buybacks. But when you kind of think about the second half of this year, the comparisons get extremely favorable from some of the concerns that they've had to deal with in the second half of last year in terms of the Forex issues, the supply constraints and what have you. So we do see revenue accelerating in the second half of this year. And we see a number of catalysts on the horizon in calendar 24 as well as calendar 25. And of course, the new VR headset and kind of the potential for spatial computing longer term, I think also represents a great opportunity for the company. But ultimately, this is a very safe haven type company out there for investors, no matter what type of macro kind of economy that you're in. So it's a name we continue to like and a name we continue to tell investors, don't necessarily trade. It's a name you want to be investing in for the long term.
Angelo, I remain skeptical on any type of headset right now until it's proven that it can be successful in market. We've discussed this in the past. So yep. When you think about the free cash flow profile that you're anticipating for Apple, how is it that the company can go into another hardware category now and make sure that their margins are not compromised, that free cash flow that you're baking in for some of this growth as well is not compromised, and that they can retain this $3 trillion market valuation along the way?
Yeah, listen, I think as far as kind of our assumptions are concerned, there's not much, I think from our end as well as the street side of things in terms of kind of, forecasts out there, whether it be for a car, whether it be for kind of, a mixed reality headset and the adoption of that technology on the spatial computing side of things over the next kind of 5 to 7 years, where again, I don't necessarily think kind of what you're seeing on that screen right now is going to be that, that kind of, final look that Apple is looking for, right? I mean, clearly the kind of the sleeker glasses and what have you, eventually down the road. But, as far as we're concerned, I mean, the free cash flow generation continues to come from, the growing share that we're going to see, we think, on the smartphone side of things, that is how they kind of, emerge into new addressable markets, in areas like India, penetrating into India and other type of markets where they're not as kind of well penetrated in. And, of course, through higher average selling prices as we kind of get foldable phones, among other things out there. And that's really kind of been the key for Apple over the years, and their ability to really kind of sustain that free cash flow and grow the free cash flow. And we can't forget the services side of things as well, right? We actually think services growth will accelerate into the second half of the year, but long term, I think you see a mid to high single digit growth rate on the services side of things, higher margin in nature, about 2x the margin profile of their hardware business. So when you kind of put that all together, that's where we kind of get those free cash flow assumptions and why our conviction level is so strong long term for this company.
Angelo, as always, you make a good case. Even as much as I don't want to think about the type of face tan I would get if I were to wear that headset on the beach and watch a movie during the summer, that is for a future discussion. Angelo, we appreciate the conversation here this morning. Angelo Zeno, CFRA Research Senior Equity Analyst. Thanks so much.